Great. Now, Frank, what are the benefits for investors of investing in infrastructure investment companies?
The general benefit is that you've got long-term, stable, inflation-linked cash flows. Yeah, and the specialty for us is, if you invest in BBGI, is that you've got a global footprint. So we invest in Australia, in the US, in Canada, in Germany, in Norway, in Netherlands, and actually in the UK. You can see that's all AA and AAA rated countries. And the revenue streams come from public sector counterparties. So in generally, we are very independent from general actually economic cycles and also volatility of stock markets. And that's the beauty for many investors, that you have stable, long-term, predictable cash flows coming from the public sector revenues globally.
Yeah, well, that does sound attractive. Phil, have you got anything to add to that on the benefits?
I think particularly in relation to investment companies, the closed-ended nature of those companies means that what are very illiquid direct infrastructure investment assets sits quite well within that closed-ended structure. There's a good liquidity match between the timescales on which infrastructure assets can change hands and the protection of cash coming back to companies, and how the shares are traded on from a person-to-person basis rather than having to give cash back to investors when they redeem.
Yeah, well, the suitability of investment companies for liquid assets is particularly important. There are some high-profile incidents in the open-ended world where that hasn't worked so well. Of course, with our closed-ended structure, fixed number assets in issue, investors buying and selling on the stock exchange, managers can just focus on the long term on their portfolios.